Hey everybody, this is Jim at SP500chart.com. It is midday on Saturday, March 9th, 2013. By the way, exactly 4 years ago at about this time, it wasn't on a Saturday, but on March 9th, it's when we saw that total panic market bottom. So this bull run is now officially 4 years old, and I just, that's amazing. And I'll talk a little bit more about that. But before I get into any details, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a fast-talking guy who draws lines on charts. So let's take a look. Okay, we're looking at a 30-minute chart of the S&P that covers almost all of the trading for 2013. Not quite. It actually, if you go down to the first 2 weeks of January, you'll remember what it looks like. The market's gapped up, and then we established this channel, and this red channel that broke down into a continuation inverted head and shoulders pattern. And, that was one of the possibilities. We didn't really know going forward. But let me tell you, a lot of times when you look at these patterns in retrospect, you will see head and shoulders patterns scattered throughout the chart. Sometimes they will mark major turns. Sometimes they will mark minor turns. Other times they will mark what we had here, a consolidation. And sometimes you'll look at the chart after a while and you go, wow, what a cool looking thing, because we have a head and shoulders top. Then we have a head and shoulders bottom. Then a top, then a bottom, then a top. And when you look at the big thing, you end up with an even larger pattern that could be happening here. So I don't want you to think that because we had a 2-week-long inverted head and shoulders pattern, that means this guy is just going to run on for the next 4 years, because this pattern is 2 weeks long as compared to the pattern that we kicked this rally off of back here in March. Here's the low of March 2009. This whole pattern took about 9 months to develop, compared to the pattern that we're looking at today, that inverted head and shoulders pattern that took 9 days. So there's a big difference. When you look at this chart, sometimes you'll say, well, wait a minute, it looks as big as that other one. Well, it does, but this is the 30-minute chart. The other one was a 3-day chart. That said, and I know you're not dummies. I don't mean to insult your intelligence. Just to remind you, this inverted head and shoulders pattern has a target of about 1560. We're getting so close to this red line up here. It is just amazing. If we take a look at we almost have to go to a monthly chart. See if a 9-day does it. 9-day does it better. That red line is drawn over the 2000 market top and the 2007 market top. And guys, I may be dead wrong. I may be absolutely, thoroughly, and completely out to lunch on this. But it just looks like we're going up in a wedge here. And that usually means the market's about ready to put on the brakes and potentially reverse the entire thing that created the wedge. So you can see that if we go back to the last big rally we had, I'm going to change the color of some lines here. We'll go with some blue lines. You can see that back when we rallied off of the 2002 lows, somebody might draw this and say, well, this was also a wedge, but we got over it. Yeah, but you didn't stay over it. Stayed over it for a year almost, but then it came down very, very hard. Right now, We are barely over that little brown line that we've been looking at for a while. As you can see it here. And we've gotten over that line before. And the time we did it before, the market came down hard. Is that setting up again today as I speak today? That's kind of my hunch. I'll be honest with you. We'll know when we get there. The reason I say it's a hunch is that usually when you have one of these events, you have some pattern that gives you a precursor that we're getting ready to encounter some trouble here. And each time we've done that over the past 4 years, there was one time back here where it looked like we were making a head and shoulders top, but I mentioned that the problem with that was that we had an even larger head and shoulders bottom that said, I got to get to 1340 or 1350. So this pattern failed. This was a head and shoulders top, and it broke down, but then it recovered and made an inverted head and shoulders that we see right here. Then we had another head and shoulders top. That one worked as advertised. Then we had a head and shoulders top right here. That one worked as advertised. We had a head and shoulders top late in 2012. That worked as advertised. But as we look at the chart today on March 9th, 2013, we do not yet have a topping pattern. It's just not there. So you can't say that the market's going to reverse hard because you don't have the pattern that shows you that we put on the brakes and now things are getting ready to reverse. Now what you do have is you do have a break of this red channel. I think that is symptomatic of some inherent weakness in the market. But you see that on Friday, yesterday, the 8th, the S&P shows that it wants to try to crawl back into this channel. The question is, can it do so? Well, if it does, then I would watch this channel right here, because that is working for the past couple of weeks. And I would also be very wary when or if we get to that 1560 level, then I think you need to be prepared for there to be some resistance at that point. Just because this red line is here doesn't mean the S&P has to make that target. Okay? We could come back down the entire week and have strong selling, rally back a bit, and then sell back again, and we could be potentially making a top here. And there are a couple different possibilities, but none of them are at all complete at this point. I'll show you, for example, we've got this line of support right here, just under 1400. Maybe we look back in retrospect at some point and we go, well, here's a shoulder, here's a head, here's another shoulder. Or maybe we look back on a daily chart and we end up saying, here's a shoulder, here's a head, and then there's another shoulder. So there's all kinds of possibilities that could happen, and none of which have yet. We do know we've got some pretty decent lines of nearly parallel support. One is at about 1498. The other one is down at around 1400. We've got some other things to consider, but until we get a more complete picture, there's no real way of saying, yeah, this is the top. All we can say is this line made a top twice. 2 times previous to this line turned the markets back. It didn't turn them back in a hairpin turn. There was still some decent dips and rallies, but in retrospect, this line made the tops twice. Let's do a quick review of what happened on Friday. Friday we got over this little what appears to be a little consolidation pattern here that looks like it wants to continue this move up to that 1560 level. We came up, rallied hard on Tuesday, went sideways for 3 days, broke out, if we go to a 5-minute chart, broke out over this sideways consolidation at the open on Friday, sold back down, found support at this bottom line, and then started rallying back up, albeit in rather lazy fashion. So as far as the week goes, we came into the week looking at a potential inverted head and shoulders pattern, and, we got the breakout. So that pattern did do what they tend to do, and that is break out to the upside. Now, in all candor, I need to tell you, and I made it. Hopefully, I made it clear as we were looking at these patterns develop, that there was always the possibility that we could be having a left shoulder, head, right shoulder. So we had a bearish case, we had a bearish possibility from the chart, and we had a bullish possibility. What makes this particularly not disturbing, but frustrating, is the fact that we gapped up. So really we turned this pattern into a nearly untradeable event. If you want to trade by, quote, the textbook, which is you get the breakout, you wait for the pullback, then you go long until you get to at least the minimum target, or you may look for more. So instead, what happens? Well, we gap up. Well, okay, wait for the pullback. So far, no pullback. It looks like there won't be a pullback, at least at this point. So if that's the case, then I think this is one, because of the small target of only, where were we here? 1518, 1560. So we got a 42-point target with a breakout that took about half that off the table to start with. So it's just not easy to make a good trade in this if you're a careful and what I would call a textbook stock trader, because you would wait for the pullback. Pull back down to here. If we'd gotten that on the next day, that's a no-brainer. But since we're not getting it, I don't know that it's worth jumping in at 1550 thinking, gee, I know we're going to get to 1560 because there's an 80% probability based upon the inverted head and shoulders pattern. And that just doesn't make sense to me. So guys, there you have it. It's pretty simple, pretty plain here. I would look at these new blue lines right here. I don't think that channel is going to last for long because it's running up at an aggressive rate. But still, when this line breaks, that may be, well, that should be a sign that we're out of this channel. Then we begin to see if we get a back test and what that means if and when we get there. So guys, this market is the Energizer Bunny. And, if you're short, I'd just say be careful. Nothing wrong with shorting up here. But I would rather wait until there's a recognizable pattern or until we get some channels breaking in unmistakable fashion. So, guys, I appreciate you taking time out of your day to watch this. I want to remind you, if you're seeing, if you get these videos, all of them, all bunched up, 4 or 5 released on a weekend, I just want to remind you, you can get each video delivered to you on the day it is released if you'll subscribe to SP500chart.com. It's a grand total of $19.95 per month. And every subscription starts off with a $4.95 2-week trial. So, you got $5 to spare. Give it a shot. See if it works for you. Look, thanks for watching. Take care of yourselves and take care of your money. And I think 2013 is going to be a real interesting year. I hope you will join me at SP500chart.com with a subscription so we can follow it. And if you were already a subscriber, I really thank you, and I hope you'll stick with it. And we'll see what develops over 2013. The market is approaching a milestone, and this is going to get interesting. Thanks. Take care of yourselves.